All right, let's dive into something that's changing the crypto game as we speak: AI trading bots. We're going to walk through an incredible guide from the experts at RedHub AI, designed to show how automation isn't some far-off future concept. It's happening right now. So if you've ever felt like you're a step behind in the markets, well, this one's definitely for you. RedHub AI kicks things off with a pretty bold statement, don't they? Manual trading died years ago. Whoa! Their whole argument is that the game has completely, fundamentally changed. The old way of doing things, staring at charts until your eyes glaze over, according to them, that era is officially over.
So why such a dramatic claim? That's a huge thing to say. In this first part, we're going to break down exactly why they believe the old way of trading is basically obsolete. And here's a hint, it goes way beyond just being faster. It's a total mismatch in what a human can do versus what a machine can do.
And this comparison chart, man, it just lays it all out perfectly. Think about it. You and I, we need to sleep. A bot is grinding 24/7, 365 days a year. When we see a move, it takes us seconds, maybe minutes, to react and click the button. A bot executes in milliseconds. We might be able to juggle, 5, 10 pieces of information at once? RedHub says these things scan over 80 data points simultaneously. But maybe the biggest difference of all, our decisions get tangled up with fear and greed. A bot's decisions are based on one thing and one thing only: cold, hard data. It's a completely different league. Okay, so you see that massive advantage. And the next question is pretty obvious. How? What is the magic sauce that makes these bots tick? Well, it's not magic, it's technology. And RedHub breaks it down into 3 core components that create this relentless, nonstop edge. First up is machine learning. Honestly, the easiest way to think about this is that it's the bot's brain. With every single trade it makes, win or lose, it analyzes what happened and refines its strategy. It is constantly learning from its own experience, getting smarter and smarter over time all by itself. Next, we have natural language processing, or NLP. And this is where things start to feel a little bit like sci-fi. This tech is how the bot listens to the market's mood. It's literally reading the internet, scanning news headlines, X threads, Reddit posts, and figuring out how people are feeling. Is the market greedy? Is it fearful? The bot knows, in real time. And the third piece of this tech puzzle is reinforcement learning. Think of this as the bot's personal training simulator. It's like a video game where it gets to practice millions of trades with fake money. It gets a digital reward, a point, for a winning trade, and a penalty for a losing one. So by the time it's using real capital, it's already learned from millions of mistakes without risking a single penny. All right, so the tech sounds amazing, maybe even a little intimidating. But the real question is, how do you actually get started with this stuff? Well, RedHub makes it really clear this isn't just for coding geniuses. They provide a super practical, step-by-step guide to setting up your very first bot. First things first, you've got to pick your platform. And there are quite a few great options out there that RedHub highlights. You've got platforms like 3 which is sort of the all-in-one Swiss Army knife. Then there are more specialized tools like Token Metrics for deep dive analytics or Crypto Hopper for its community features. The key is just finding the one that fits your style. And here it is, RedHub's 5-step setup for beginners. It's all about starting safe. Step 1, just pick a platform and start with a free trial. Easy. Step 2 is crucial. You connect your exchange account using an API key. And listen to this part. You make sure that key can read and trade, but never has permission to withdraw. So important. Step 3, and you cannot skip this: paper trade. Use fake money for at least a month. Then, step 4, when you are ready to go live, you start small, like really small. No more than 5 to 10% of your portfolio. And finally, step 5, you have to check on it. This isn't a slow cooker. You can't just set it and forget it. So once you've gotten the hang of the basics and you're feeling comfortable, it's time to level up. This is where you can start to unlock the real power of these tools. Let's take a look at a few of the more advanced strategies RedHub lays out. You've got strategies like grid trading, which is absolutely perfect for those boring sideways markets. The bot just sets up a grid to buy low and sell high over and over again. Then there's DCA, or dollar cost averaging, which automatically buys the dips to lower your average entry price. Remember that cool NLP tech? That powers sentiment arbitrage, where a bot trades based on the hype or fear it sees on social media. And finally, there's mean reversion, which is built on the idea of what goes up must come down. It sells the big pumps and buys the big dumps. Okay, everyone, lean in for this next part. I'm serious. This is, without a doubt, the most important section in this entire guide. We're talking about risk.
rules, and the hard reality of using these tools. Because, and RedHub is crystal clear on this, a bot can lose you money just as efficiently as it can make you money. RedHub lays out a few rules that they call non-negotiables, as in, you just have to do them. Rule 1. Position sizing. Never, ever risk more than 2% of your total capital on a single trade. Rule 2. Always, always use a stop loss. That's your automated escape hatch. Rule 3. Don't put all your eggs in one basket. Run a few different bots with different strategies. And Rule 4. Keep cash on the sidelines. They recommend at least 30%. That's your dry powder for when big opportunities pop up. And all of this really boils down to the single most important truth. I'm just going to say it plainly. Bots are not magic money printing machines. They are tools that can improve your odds and help you execute better. But even the best system on the planet will have losing trades. It will have losing days, and it might even have a losing month. These things don't guarantee profits. They manage probabilities. So what are realistic expectations? This chart from RedHub gives us a really good baseline. In a raging bull market, yeah, maybe a 5 to 15% monthly gain is a realistic target. But in a choppy, sideways market, you're looking at something closer to 0 or even small losses. And in those markets, the bot's #1 job isn't to make you rich. It's to protect your capital so you can live to trade another day. Survival always beats glory. And that leads us to the powerful final thought that RedHub AI leaves us with. This isn't theoretical anymore. The robots are already here. They're in the market, trading right now. So the real question isn't if this is happening. The question is, are you going to join them or are you going to get left behind?